Welcome back to the Chart of Account course for the second section. In the previous section, we have been learned about the basics of chart of accounts. In today's section about structure of chart of accounts. The chart of accounts is generally structured to display information in the same sequence. It appears on financial statements. This means that balance sheet accounts are listed first, followed by income statement accounts. Primary accounts such as assets, liabilities, shareholders, equity, revenue and expenses can be further divided into sub accounts. These sub accounts including operating revenue, operating expenses, non-operating revenues, non-operating losses. The sub accounts may also be organized by business functions or company divisions. For instance, a small company chart of accounts might categorize its sub accounts under the primary assets, primary liabilities, primary shareholders and equity accounts. For an example, I am running a metal manufacturing company. I am the producer of steel. To produce the steel, when I want to follow this chart of accounts, I can maintain all my expenses, I can list all my revenues, I can list all my assets, I can list all my liabilities in a format. That listing itself consists of structure of chart of accounts. When I say assets, assets is one category which is considered to be as a main category. Under the assets, I have purchased building, I have purchased machinery, I have purchased some other manufacturing units. All these comes under a subcategories of listing of chart of accounts. Like this, all for every individual business it is different. So, for my business I may have main category, one main category and two subcategories. For other business they may have 4 main categories and 10 subcategories or 10 main categories, 2 subcategories. So, the categories, the main category listing and subcategory listing of chart of accounts is considered as structure of chart of accounts. So, as I told you, one company may have assets as one category, liabilities as another category. When it comes to the assets, their subcategory is cash, savings account, petty cash balance, accounts receivable, undeposited funds, inventory assets, prepaid insurance, vehicles and buildings. The second category is liability. Under liability, the subcategories are company credit card, accrued liabilities, accounts payable, payroll liabilities and notes payable. This is one structure of one company for an example. So, account identifiers in chart of accounts. A chart of accounts usually contains identification codes, name and brief description of each account. We have to give one coding to one category. As I told you, structure consists of both categories and subcategories. To identify the categories and to identify the subcategories, it is required to us to name them. It is required to us to code them. So, each category is going to be coded and accordingly subcategories is also going to be coded. And it is very simple, like, so you can code all the assets from 100 to 199 and you can code all the liabilities from 200 to 299. You can code all the equities from 300 to 399. If you feel there are more subcategories, suppose assets, I have 1 or 2 categories under my assets. one or two subcategories under the main category of asset. So, if you take 100 to 199, it is not possible. At that time, you have to go with coding it from 1000, 1001 to 1192, and you can start the liabilities by coding it from 2000. So, according to the requirement, you can code each category and subcategories. The codes can be broken down further into categories like current assets from 110 to 119, current liabilities from 210 to 219. So, the number of figures used depends upon the size and complexity of the company and its transactions. The total structure of chart of accounts completely depends upon the transactions that is going to be taken place in the company. So, if you visualize one of the example that I have given for you to make you to understand very clearly how the listing is going to be done in the chart of accounts. So, to understand the structure format of complete chart of accounts, it is helpful for us to go with the following example. If you see, the company has given 8001 as the turnover of Europe and 8002 as the turnover of USA, 8003 is turnover of Asia. So, like that all the turnovers has been started with 8000 and turnovers was categorized under the code 8000. And when it comes to the cost has been coded with 7000 and accounting fee started with 4000. Like that, how many transactions that is going to be taken place in the company, based on that the structure is going to be dependent. And adhering to the financial standards, while chart of accounts can be customized to reflect the company operations, public companies must adhere to the guidelines set out by the financial accounting. And maintaining consistency in your chart of accounts from year to year is most important thing when dealing with a chart of accounts. This consistency ensures that accurate comparisons of the company finance can be made over the time. And when it comes to the chart of account format, there is no a single or universally accepted chart of account format, because company to company the transactions are different. But in consistency, what we can say is all the companies is going to code, name the each individual transactions that they are going to be taken place in the company. And consistency in the format over the time is very important for ensuring reliable period to period and year to year comparisons. So, after having this much discussion, now I got a question in my mind: is chart of accounts accounting is really required for our business? To be frank, it is not that much required, but as we discussed in the previous section, due to maintenance of chart of accounts, the information communication can be done easily, decision making can be done easily. So, there are a lot of benefits by maintaining the chart of accounts. While not legally required, but a chart of accounts is considered necessary by business of all types of sizes. It helps categorize all transactions so that they can be referred quickly and easily. In a conclusion, a chart of accounts is an essential document that numbers all the financial transactions conducted by a company in a accounting period. The information is usually arranged in categories that must match those on the balance sheet and income statement. The chart of accounts serves as a invaluable tool for assessing detailed financial information, which benefits individuals within the companies as well as external people, including investors and shareholders. The chart of accounts is not just a regular financial document, but rather it is an integral part of strategic financial management and informed decision making. Okay. So, I hope all of you have understand the importance of chart of accounts usage in our individual companies, and thank you.